You might have seen the news that Ernst & Young, one of the big four accounting firms, is considering splitting out its audit and consulting business. Today, we're going to dive into this story and discuss why it's attracted global markets' attention and what it could mean moving forward.
Welcome to the channel and enjoy.
So before we discuss the story itself and unpack why EY are considering this, it makes sense for us to take that step back and think about who are the big four accounting firms and what are the motives behind this potential decision. So first and foremost, the big four accounting firms. There are four of them: Deloitte, PwC, KPMG, and Ernst & Young, commonly known as EY. Traditionally, they had their basis in accounting and audit work, but of course have evolved and are now full-scale professional services firms. From tax to consulting to M&A, they provide a full multidisciplinary range of services. Consulting departments were rebuilt as well over the past two decades since the Enron collapse that saw Arthur Andersen collapse as well, and the Big Five became a Big Four. But reports have recently emerged that Goldman Sachs and JP Morgan, two of the global investment banks, are reportedly helping Ernst & Young and advising them on a possible listing, potentially through IPO or the sale of its consulting business. This is one of the biggest restructures and shakeups we've seen over the past 2 decades, and there's implications for global markets as well as the rest of the Big Four as well. And so just to understand the Big Four business model, none of them are publicly listed. They all run with the partnership model. It's worth noting that across the Big Four, they're relatively homogenous in terms of structure and processes, though of course there are nuances between them. They all run with a multidisciplinary model. Being none of them are publicly listed, there is a relatively close proxy that we can use with Accenture. They're another leading global consultancy focused more on the technology side. Accenture was actually spun out from Arthur Andersen, but they're now listed on the New York Stock Exchange with around a $200 billion market cap. The difficulty and why there's a lot of discussion about this potential restructure surrounds particularly conflicts of interest between service lines. For example, if you're auditing a client, but then selling consulting services, it's an area that is having increased regulatory scrutiny. For example, the UK competition watchdog called for an operational separation of the audit and consulting within these existing firms in 2019. And it is worth noting as well that there's a significant amount of time and resources that goes towards compliance within the Big Four. Anyone who's worked within the Big Four, I'm sure, is familiar with this, but it's worth noting that compliance, systems and processes, particularly surrounding independence, are a major undertaking. There are a few other considerations as well in terms of why this potential decision may be thought about. Audit is a slower growing segment, but it's much more steady, while consulting is more cyclical in nature, particularly with digitization. It's got higher growth components, which is going to be fascinating to see the interplay if they do consider this. On a recruitment front as well, graduates may look to enter in audit or accounting, but they may potentially consider a move towards consulting or other types of advisory service lines after qualifications. And in terms of cross-selling as well, of course, there are inherent benefits achieved by scale, brand, and the ability to have existing relationships with the organizations that you're already working with that will have to be a consideration when considering any of these decisions. So I thought this was quite an excellent article published in the AFR a few days ago that really helps to just wrap up everything that we've been discussing. So as mentioned, EY is being advised by JP Morgan and Goldman Sachs on a possible listing or sale of its consulting business, considering a potential IPO or partial sale. This would be the biggest shakeup to the advisory sector globally since 2002 when the Arthur Andersen collapse. Any float or sale would provide a potential windfall for partners, and it looks like in terms of the lens of this report that the firm's audit business would remain within the partnership, and then some of the advisory components would be spun out. Of course, which components and how that looks would have to wait for the situation to continue to evolve if it does proceed. The concern's been triggered by a string of audit-related failures that led to the regulatory crackdown, including the collapse of EY clients Wirecard and Luckin Coffee, and on the KPMG UK front, Carillion. It's worth noting that Wirecard, for example, was a company in Germany. Share price went almost to zero, and EY was the auditing company presiding over that. In terms of scale itself, global revenue in the last year was around about $40 billion, generated about $26 billion in sales was the consulting business, and the audit business was just about the balance on the $14 billion side. So that gives you a bit of a mix in terms of how the audit and consulting dynamic is. Any split would enable a newly independent audit business and the existing non-audit business to access more capital and expand more quickly. As you can see here, EY hoping to emulate the success of the Arthur Andersen spin-out, which was Accenture. As we talked about previously, they're around $200 billion worth of market cap now, and they actually raised US $1.7 billion 20 years ago, so that's an incredible story. And of course, being the nature of a partnership, any decision on the split would require a vote of the almost 4,000 partners. They're scattered across the independent national firms. Listing or partial sale would likely bring a massive windfall to existing partners. It is still very early stages. There's only been speculative reports at this stage. We've got to wait to see as more information comes to the market, but it does have the ability to transform and really revolutionize the consulting and audit sectors around the world. And so as you can see, there's a lot of different moving parts. Of course, no decision has yet been made. The story will continue to evolve and unfold. The global chairman and CEO of Ernst & Young wrote in an internal note. He stated that I wanted to confirm that no such decisions have been made. We regularly conduct scenario planning and review EY businesses on a global basis to determine that we have the optimal strategy, structure and footprint to focus on delivering high quality audits and exceptional service to all clients across EY service lines. The Big Four work on relatively similar rhythms. Of course, as mentioned, there's nuances between them, but it's probably a fair bet that the global leadership teams at KPMG, PwC and Deloitte are all at least having similar discussions, and we'll be watching on with this attentively. I'd love to know your thoughts on it all. Drop in a comment below what you've made of this story and how you think it evolves. Here's another video you can check out after this one. Thank you so much for joining us, and for now, stay well and happy investing.